Welcome. Okay, we have a few minutes till the closing bell, and we're going to take a look at some of the charts that are setting up here. We rolled up a lot of puts yesterday. We were short naked puts. Uh, we had strangles on. We converted those strangles into strangles in anticipation of a rally. And we're getting the rally in the markets. Tesla is one of those straddles. It is down on the session, but well off the lows of the session, considerably off the lows, as you can see here. And it looks as though we're getting ready for a push higher. We have strike price on the straddle at 710, expiring on Friday. So the time decay is ramping up here, and we're profitable on the trade, and I'm entertaining closing out the trade and making profits real, because if we get a big spike up tomorrow, that would put that money at risk. So I'm going to be a little bit sidetracked today, going back and forth and making the decision about what I do here. We still have about $30 worth of room here. It's going to cost me. I'll show you here what we got. It's going to cost me around $30 to close out the trade. Now I can roll it into next week, but I don't necessarily want to do that on a straddle. All right, I'll toy around with this. Let's close this. And we're profitable on our Netflix trade. We're along the common as well. And it looks like we're getting ready to break out here. Our strike is at 190. We still have a little bit of room here. What's going to cost me to close this sucker out? About $8. We have a lot of time decay potential here. So here's what we're looking at. Closing out. God damn, I lost it. Closing out the trade for about $8. We'll revisit it. All right. Let's talk about minutes. Initially, the knee-jerk reaction by the market was bearish, but we know that the initial reaction by the market is usually the wrong reaction. Let's say hello to people. Franklin, top of the afternoon to you. Talon, we are living the dream today. A good day. A good day. Luis, happy Wednesday to you, my friend. Okay, so let's go to the closing price action here. So NUGT, of which we are long and painfully long of in recent weeks, is showing a bit of a reversal on the day, which is good. We're down in the session, but we're rallying off the lows. I sent a note out early in the day about this chart down here. I'll go to the big screen to display the dollar. The dollar, I observed, was possibly putting in, this is a 15-minute chart, possibly putting in a double top, and I was watching for a break below this lower band of support. We got that break, but this really doesn't matter until we break to new lower lows. We have yet to do that. So while I like to be giddy like a schoolgirl and go jumping in with both feet and buying more gold mining stocks, the dollar's still strong here. So we can't ignore the strength of the dollar. We know the dollar trades inversely of the gold stocks. We can't fight that. So to buy more here right now would be a gamble. We already have a sizable position. I'm not looking to put on any more gold mining stocks until such time as we see the dollar making new lower lows, and ideally we see NUGT in the high 20s. So that's the plan at current. I don't see that changing much. The only thing I would negotiate is if we saw the dollar break and we had buyers of NUGT front running a recovery in NUGT, and I saw a reversal day on NUGT, the GDXJ, silver, SILJ, the silver mining stock ETF, then I would look to go buying more. Not yet, though. This is the close on the dollar is good. It's a strong day. We're up a half percentage point. Now, what's the fly in the ointment for the dollar? It's not the yen because the yen is weak. What we're looking at is the fly in the ointment for the dollar is this chart here. This is a long-term lower band of support for the euro. Now, right now, we're struggling to try to close above it, but at current, we are below. We broke the support level. And this is not a joke of a support line. This is the weekly view. When you look at it on a weekly time frame, it looks as though we're tapping it, right? So it's a weekly chart. We want to make sure that by the end of business on Friday, we are closed above this support level, and then we can entertain possibly looking to put on a more of a trade on the gold mining stocks. Not right now. This may hold, it may not hold. We don't want to hope and we should fear, right? We're feel for right now. We want to be very, very cautious about averaging down on a trade. All right. So we have lower left, the 10-year yield. So the minutes came out. We have a Federal Reserve that, remember, this is a month ago now. Lots happened. Economic growth is slowed dramatically. Atlanta Federal Reserve now has the negative print for GDP for Q2. That will make two sequential back-to-back GDP reports. That is a recession. So de facto, whether they like it or not, the Wall Street guys are saying a recession by 2023. I don't know what they're waiting for. The Atlanta Federal Reserve, by their own forecast, is saying that we have already entered recession. I don't make it up. I'm just going by what they tell me. So yields are moving up higher, but we're still down below a 3 handle. That's allowing growth stocks to rally. Now, you can see that the NASDAQ 100 coming in here, still a good close. Let me see how my position is doing. I got to check in with Tesla. Yeah, we gave back some. We still have a 20% profit on Tesla. Looking for some last minute buyers to come in here. This is a daily chart. We broke out yesterday. We could quite possibly do a retest of the breakout point tomorrow. What's it going to cost me to close this? Come on, need some buyers. $5 minutes to close. Hoping they pull out some time decay at the back half of the day here. All right. I don't want to bore everybody to tears, so I'll check back in. Talon, Banks, huh? Now you got me thinking. Yeah, they're down a quarter percentage point. Yields are rising, which is technically bullish for the banks. Let's take a look at the big charts. See how they're poised to close on the day. They were positive. Yeah, the banks are looking good. Down volume is very, very light today. I just don't like this weekly chart. I mean, we're struggling to get back above a resistance level. I really need to see a close above 32 on the XLF. I mean, we're right smack dab into a resistance level on a weekly time frame after breaking down. So I'd rather wait to see more strength here. It's like the little engine that could. Jumped into gold and silver again. Need to see dollar. Yeah, I think that we're going to get a bit of a reprieve here. I mean, this is really reaching unsustainable levels. And what we're seeing here, I think this is quite possibly an exhaustion run on the dollar. You saw it begin here with an outside reversal bar. They negated it the next day, rallied but faded. Then you had a jump up on the 5th. That was like a evening star formation. Then today, another spike up. So you're really entering unsustainable levels here. We're coming dangerously close to the prior high last seen back in March of 2020. And we'll be looking to see, do we put in a lower high? And I could help move this along. All I need to do is draw a line, and that'll mark the top. So I like to think that sometimes. There we go. There's our double top, fellas. Double top. Got to buy gold and silver. Consult your financial advisor. Okay, so I think we just called the top on the U.S. dollar. If it goes higher, then tomorrow there's not going to be a Thursday night stock charge live. All right, Jeff. Heard there's a lot of pressure on Boris Johnson. Maybe that will be the breaking point. What's the pressure on Boris Johnson? I know he's politically he's poisoned. He did not deliver on much of what was expected of him. But in terms of Forex, I don't know how much influence he really has in the Forex market. All right. I got to see what Tesla's doing here. All right. They bounced it back a little bit. It's not a bad close. I think I'm going to carry this over. Tomorrow, there should be a lot of time decay. Yeah, we're coming back here. Yeah. We have $15 between where we're trading at current and our strike. Yet it's going to cost me right now to close out the trade about $30. So there's more meat on the bone that I could wait to take off. So I'm going to carry this one overnight, and hopefully it doesn't come back to haunt us by doing so, because I could book a 23% profit right now. I want to check in with Netflix as well. All right. Netflix had bounced back. Our strike is at 190. And We closed at 184. Let's see how much meat on the bone there's left there in terms of time decay. Yeah, so we have about $3 worth of time decay on Netflix. So I may close out this trade probably after the first hour of trade tomorrow. And because there's going to be volatility, the options are still going to be expensive in the morning. So we'll let that volatility come out and we'll look to close out these trades and reestablish new trades going out and into next week. We're always looking to generate cash flow, right? So it's not about taking the last scrap of meat off the bone. It's about making what you want to make, closing it out, not taking too much risk, reestablish going out into the next week, and setting up your cash flow for the following week. Oh, I see. Cabinet members is resigning. They want him out. Okay. I think they could do a vote of no confidence in Parliament. I believe. Don't quote me on it. Definitely fact check me. But whether or not that removes him from office, I don't know. So, all right, folks. Thanks for being here. I'll talk to you later. Be well.